Hello, and thank you for joining us today. I am Tim Lee. I'm a research analyst with Red Cloud, and I'm joined today by Sean Cleary of Strategic Resources. Sean, let's start with an overview of the iron and steel business. You're planning to produce products specifically tailored for the green steel industry. Can you tell us more about these steel plants and why you chose this strategy?
Certainly, Tim. Well, first of all, thanks for having me on. Um, we are particularly focused on the iron space in Quebec, in Canada. As many people would be aware, in order for the Western world to reduce CO2 emissions, many of its steel mills are being converted from blast furnace to electric furnace, thereby reducing steel furnace emissions by about 2/3. Which is very significant given that steel production represents about 10% of global CO2 emissions. So that's why you see, particularly in the United States, which is leading the way in terms of electric steel manufacturing. Canada is going through a transition to convert furnaces right now, largely funded by the large companies that own these plants, as well as the Canadian government. And you see the same thing happening in Europe and other parts of what we call the Western world. So there's a significant change in the steel recipe when you move from blast furnace to electric furnace. Electric furnaces basically run on scrap steel. So about roughly 70% of the recipe for steel coming out of electric furnaces is scrap steel. The other roughly 30% is what are called ore-based metallics. So that is directly reduced iron, hot briquetted iron, or pig iron. So these are the metallic forms of iron, as opposed to iron ore, which is the oxide form of iron. In order to produce DRI and HBI, iron ore must be pelletized. So that's the first part of what we're really focused on is the expected, global deficit in pellet capacity for producing what's high purity iron, which will be used in electric furnace steelmaking. So that's phase one of our project. We've, just signed up a big deal with Javelin Global Commodities, who will be supplying our plant in Port Saguenay with 4 million tons of iron ore per year. We plan to produce 4 million tons of high purity DR grade pellets for that part of the market. And then we've, in phase two, have planned to do an expansion to install our own DRI furnace, already permitted at Port Saguenay for that, where we have a long-term lease. And of course, Port Saguenay has a, strategic advantage over other geographic areas. One, we have permits in place. Two, access to natural gas through the Trans-Canada Pipeline, which goes to Saguenay, as well as low-cost hydroelectric, which is a mainstay of the Quebec economy.
Now, the previous feasibility study for your BlackRock project envisioned a vertically integrated operation, including the mine and downstream processing plants. But now you're looking, at least to start, with just the pellet plant. What is the rationale for that?
It's the rationale is quite simple. It is a simpler project, more easily executable, so it's lower risk. It's also considerably less capital required. So in the case of the phase one pellet plant, it's just under 500 million US dollars of capex. The overall project is over 1.5 billion. And the returns are higher for this section of high purity iron where we want to be focused. And we see a very significant demand. The industry is estimating that the high purity pellet deficit is going to be between 20 and 40 million tons over the next few years per year. So we'd like to solve for 4 million tons of that. We think that there's a big market demand, and we believe that Saguenay is the ideal location to be doing this.
Great. Now, you had mentioned that Strategic just announced an agreement with Javelin Global Commodities. a commodities trading group. What does this agreement provide for?
So it's a 10-year agreement to provide high purity pellet feed to the plant at Port Saguenay. So Javelin will provide 4 million just over 4 million tons of pellet feed per year. They will also purchase the pellets that are produced at Port Saguenay. So it's an offtake agreement as well, and on an agency basis. And finally, we've worked out an arrangement where Javelin would provide Strategic with $150 million working capital line of credit, which is the working capital to operate the facility in phase one.
Looking at the project financing, you also recently announced that you brought in a bank appointed as lead for the debt financing for the project, targeting $300 million. What steps remain for that to become finalized?
Yes, so we announced that we've engaged Societe Generale on the project finance debt side, as you said, Tim, to raise $300 million on the debt side, which will go towards the overall capex of $470 million. In order to complete that debt part of the project financing, we have a little bit more engineering to do, as well as some metallurgical tests that are coming with the OEM. So we're using Metso Autotech, which is the world's leading pellet plant equipment supplier. So Javelin will be providing us with samples of the source pellet feed material. Those will be tested by Metso. So basically for plant optimization. So we'll optimize the plant to those pellet feed sources. And then we will complete a definitive engineering study. And the timeline to do that is basically over the next 6 months.
In addition to that debt, what other options are you looking at for project financing?
Yeah, so on the equity side, we have a couple of major shareholders already in the company in the form of the Quebec government through Investissement Québec, as well as Orion Mine Finance, and as well as Ross Beatty's Lumina Group out west, and the Cree Nation government are all investors in the company today. So we'll be looking to some of our major shareholders for the balance of equity, and we've been approached by some of the financial institutions as well as some strategics, to discuss how we'll complete and round out the overall project financing.
And you had mentioned Metso that you're working with. What work remains to be done before you would look to start construction on the plant?
Well, with Metso, we already have a pretty robust quote and information in terms of what they'll be providing as equipment suppliers. Like I said, there is some metallurgical testing that has to be done on the source material just to optimize different parts of the indurating furnace, which is a part of the pellet plant itself, so that we can maximize the throughput basically and minimize the cost. In addition to that, we'll be working with our consulting engineer to complete all the civils on the site. So we already have a long-term lease on an industrial park at Port Saguenay. Currently the port, in partnership with the government, this is a Canadian federal port. So in partnership with the government and the provincial government, are installing a conveyor system, which will go from the wharf up to where the pellet plant is to be located on our leased property. So that's about $110 million conveyor system that's currently in construction. So that's underway. That will convey pellet feed from the wharf up to the plant and the pellet product back down to the wharf so that it can be loaded on ships to go to market. It's expected that conveyor system will be complete construction next summer. So around the time we get completed on the full feasibility study. So we do have to do the civils on site. We have some work to do there. Some of this work has already been done because we've been working on the overall Blackrock project for a number of years already. And then once we have that completed and that document completed, that will allow us to complete on the debt financing. And of course, the equity financiers will want to look at that as well. And in conjunction with the decision from the board of the company, Strategic Resources, which, we're a public company listed on the TSXV. So our board will have to approve everything. So we'll be at a basically FID point sometime next summer.
Great. Well, thank you again, Sean, for the updates, and we will look forward to continuing to follow the Strategic's unique story as it progresses.
Thanks, Tim. Very much appreciate it. Everything that Red Cloud is doing to follow us, and your work on the analysis side is very appreciated.